.365, shake my hand, everybody, and welcome to another Traders War Room. Or not actually War Room, I apologize. I missed the War Rooms. Welcome to another long wave analysis where I'll be looking at individual pairs. And today we're going to be looking at AUDJPY. Just one quick short announcement. Don't forget, I've been doing this for a very long time. I've started looking at a lot of assets that might be beneficial to you. The most recent one on the channel is obviously NZD USD, where we stopped, but there's about 10 to 13 assets now that are on the channel. Please take the time to go through them. There's a long wave analysis all the way up to Euro USD. And what I mean by long wave is it's not yet too late to understand where price is right now, get a clear picture of where price is going, because that type of analysis will affect the next days, 2 weeks. All right, and then that could lead up to months if we're actually on the right side of the 2023 trend. So what I'm doing in this video is trying to map up a trend so that you never caught on the wrong side of price. But you should not be selling it if markets overall are buying. You should be waiting for those retracements and buy along the trend, because when you back test supply and demand over and over, time and time again, it is proven that markets generally honor their trends, right? When you find the right trend, when you understand the area of value and control, be it the governing time frame of the presidential 3 months chart. And in these particular special analysis that I've been doing with you, we've also been looking at the 12-month chart, right? The really, really big all take profit target for banks. Because when you understand the 12-month chart, you start to see trend reversals and creation of new trends, right? So I really, really hope you guys are taking this stuff seriously. As I do this analysis, we are plotting potential areas of value that we're going to be taking trades on, plotting potential areas of value, right, for set and forget, right, for our pending orders. And we'll get the triple confirmation. We start our war rooms. But as we speak right now, we are on the way to creating a suitable, trading plan for the year 2023, right? So let's not waste any more time. Please don't forget to like. Please don't forget to subscribe. It is always much appreciated. Don't forget to check out the link down below if you are interested in more than just me fishing for you and becoming a master of your own trading. And there's a link down below there on joining 365, right? So I'm looking at AUDJPY, and I will let's kind of like have a look actually at what happened last year on AUDJPY, because I haven't touched this chart since last year. Once again, I've been away, 90 days away, blah, blah, blah. I sent a big out email explaining where I've been to those who really needed to know. And that would be registered students. To the broader YouTube community, I hope you're well, I hope you're good. It's kind of like what happens when you just rely on one person, you are so much better in like learning how to do this for yourself. And then when we meet here on YouTube, I am sharpening your knife, not giving you something, right? So let's keep sharpening each other. Join us, join the actual internal community, take the course, really understand the rules that I'm applying here, right? So USDJPY, for the most part, I'm looking for, I feel like I was selling this thing last year. Why do I see buys? Where's 2022? Right, so there you go. January 2022, all right, so the markets were departing a very clean breakup structure, right? This is a long-term structure, right? Look at this, beautiful. October 2014 all the way into COVID 2020, and then markets finally broke structure in January 2021. And then we had a retest, sometime in August 2021, and then last year of 2022 from January, price moved all the way up. Just to emphasize this to all 365 students in Module 2, when I teach you about the trend line tool, don't forget that any supply, in this case anyways, caught on a broken valid structure will slow price down, but will not stop price, right? So price went all the way back to the supply that most likely started this entire downtrend, and then now we can start to see clean trends down, right? So I don't think I was buying most of this in last year. I'm happy to check my trading journal, but I feel like I was selling AUDJPY, and it seems like my chart is marked up for some action. It looks like we had a swing buy sometime in August last year, but the majority of the money made last year together. If you check the war rooms from September on until the end of the year, those were sells. So I'm just going to go to weekly, see if we can get clarity. Okay, so I say I had some 1:3 buy, and then here are my big sales. Yeah, these are my sales dating back from like October into all the way, I guess, December. Unfortunately, I'm not in any of these trades. I mean, I wish I was, right? This sales started in February 2023, but I was away from my terminal on purpose, right? So yeah, I hope you guys caught these beautiful sales. These are supply zones drawn from last year, guys. Supply zones drawn from last year, working our perfectly clean market distribution, fresh touch retest, and then prices dripping down, right? So what we want to do today is to see if we can catch the next wave, right? So I do remember this, but I definitely enjoyed the sales more, right? So let's find a clean chart and just break down AUDJPY, from start to finish, like we've been doing in our series, so we can just get a very clean understanding of where the money at, right? Right, clean sell profile asset, right, all the way from beginning of time since 1979, which is probably not even the beginning of time, but it is the beginning of what this broker is printing. AUDJPY on the 12-month chart, clean sell. Markets only start to consolidate at the bottom in 1989. I was not even born in 1989. South Africa was nowhere close to being free in 1989. Zimbabwe in 1989 was going through a false sense of independence as ZANU-PF started to sharpen its claws against workers and its enemy ZAPO in 1989. 1989, economic policies were around economic structuring adjustment process across Africa. So neoliberalism policies were being rained on African countries that had gained sovereignty, sharpening the type of capitalism that we have today in 1989. In 1989, at the same time, AUDJPY created a clean supply that has kind of like kept price here since then, right? Since then. If you learn how to read charts the way I teach charts, what the first thing you're going to have to accept is, number one, price is not random. That's the first thing you're going to have to accept. Whether your guru told you price is random is a different story. And when people say price is random, I don't think people have the pedagogy or the knowledge to actually explain what it is that is random in the market. It is random that on Monday when markets open, I'm making this recording on Saturday, the 22nd of April. What's going to be random on Monday is what you're going to do, what I'm going to do, what individual traders are going to do, what every single retail trader in the planet of the earth, it is absolutely random. We can create algorithms for that. There are lots of, most good brokers have guardian angel systems, right, on the platform that are algorithms that can tell you your patterns and predict your patterns as a trader, all right? But despite all those predictions, it is still random, right? Some traders are going to buy, some are going to sell. That's fine. When I say markets are not random, I am not talking about a single retail trader in the planet. I'm talking about institutional bias. I'm talking about the fact that trades are planned at a major level, reserve bank level, hedge fund level, institutions, right? If you guys, when your trading gets to a specific level, I always tell my senior traders, spend money on your business. And by that, I mean, get on the Bloomberg server. It's very expensive to be on the Bloomberg server. It's not something that you want to do before you become a disciplined trader, before you've ironed out your system. And the reason why we give access to that kind of stuff to senior traders, because number one, we know they can afford it. But number two, we understand that their value system, what they find valuable in life, is completely changed. Most traders think cars, money, houses, diamonds, and I don't know what people do with their money are the most valuable things. But you get to a point in life where you understand the importance of sustainable trading, right? And I think the Bloomberg for if you're not a registered institution, it's about $2,800 per month. But anyway, when you're on that terminal and you can't own it, you have to pay that rent monthly, about $2.8 to $3,000 per month, I think. When you're on that terminal as an individual, and you will start to understand that these institutions are organized and these institutions see each other's positions in the markets, which sharpens and tightens the area of competition. In chess, the nice thing about chess is you don't necessarily know what your opponent is thinking until they've moved the piece. And that is the retail trader interface of the markets. You only see what institutions are doing until they have done it. And on an institutional side of things, with the type of information sharing that they have, they get to see what they are thinking before they collectively move. All right. So when I say markets not random, I'm talking about the collective organization of price. All right, which is different, by the way, from broker manipulation. I hope I was clear there. That's very important, right? So 1989 to 1990, price has been stuck in the sandbox, right? This is a support and resistance trader's dream, right? I'm pretty sure you can make it a little bit neater, right, to give you some high odds. Right? This is a support and resistance trader's dream. And if that's what you want to do with your live trade support and resistance, then you're really not going to get a lot of value from this channel. We don't really follow retail trading strategies because they offer anywhere between 20 to 30% win rate, right? Which is still good enough for some traders. You can still make a lot of money with that. But we like high odd probability trading setups, right? So we've got to apply those, create complicated 365 candles, fresh touch, and then another retest, and then a hidden demand here on the 12-month chart, and price is making its way back up there. AUDJPY is two choices in the long run. In the long run, choice number one is to break out, and if it does, please, if this happens in 2024, 2025, if I never tell you this again, you want to have great buys loaded up there, and you want those buys to run up until you have great grandchildren. All right, this is not type of long trade you want to take with a plan to buy a house in a year. This is the type of trade you want to take to put under a trust account for your children's children, because it's going to take a long time for price to ever get back to the supply, if it ever does get back to that supply. But if price breaks out and give us clean buying indications, and so we need to see over the COT, we want to see a positive correlation of banks increasing their longs for at least a period of a year consistently and reducing their shorts, right? You want to see them really build that trend. You want to see this area of value here get weak, right? Long term. This is literally something you call a lawyer for. You set up some type of agreement, and all profits go into a long-term trust, because this will make you good money if you hold this long term. There's a 10-year type of trade, right? A 10-year type of trade. But there's the option where we really match, the profile of price. The question is, well, what would be the individual macro outlook look for the AUD, a very big, export a country that generally relies a lot on the price of gold and also on the success of the Chinese economy versus JPY, right? So those are the only two main things that you're going to have to consider in the long-term picture. This won't affect your trading in 2023. In 2023, this is what you need to know. You need to know that price is approaching a big consolidative supply, and we need to test that supply. Price also has to be slowed down, right? So imagine you're speeding on a road, and then on that particular road there's speed humps, and you don't even know that that place has speed humps. Your 120, 130, 140 kilometers per hour on your speedometer changes real fast when you hit a speed hump. Whether you brake and you slow down, or you go flying over the hump, and that's what the supply is here. This 2015 supply is slowing price down, trying to create some distribution of price before it gets to the bigger supply. We can see price hits, we can see a long wick, we can see buyers pushing back, and we could even argue, get a clean arrow. We could even argue that markets this year in 2023 might try to either feel this wick pushing back up, or actually just what this massive 1-year supply means right now. So already naturally, as a trader, swing to positional trader, I know I'm in a sell profile asset, and I know there's a bigger supply and then another supply which is connected to another supply. If you look here to the left, right? So I know really that buying in the long term might be a tricky situation. There is nothing actually in front of me right now on this chart. Maybe the other chart when we dial down will confirm it, but right now in front of me, there's absolutely nothing that would inspire me to go all out in buys, right? So I'm going to go to the presidential chart now to seek clarity. I'm going to start to tighten my zones. You can see that on the 1-year time frame, we didn't even notice that there was a clean tag here on this major supply, very clean tag, right? Matching out the supply here on the 3 months presidential chart. But even in this whole area, that is lower supply, where I say You've got two tight supply. So let's quickly tighten those areas. And we get a picture that looks like this, right? Once again, I am seeing that sequence alignment, right? I'm going to teach on sequence alignment. I said after 10 assets, so maybe I should actually work on it this weekend. Show you what we have so far. So I'm going to put Euro USD, Pound USD, USD ZAR, USD JPY, Euro ZAR, Euro Swiss franc, Euro Pound. Sorry, just like AUDJPY, Euro Swiss franc, Euro JPY, USD CAD, NZD and gold. So all the charts I've done, so I'm going to put them up in a chart for you so that you actually see what it looks like, what sequence alignment would look like on a spreadsheet, on a notebook, so you really understand where price is. It's going to be a lot of work, but I think if I don't do it per every 10 or so assets, I'll drown when I'm now doing for all 100, right? But look, we've got supply within a supply, and you can see price respected that in 2017, dropped crazy, then prices come back, was slowed down here. You see what I mean? By the speed limits, right? They don't necessarily always stop price, but they definitely slowed price down for about 2 financial quarters. This is a 3 months chart, so for about 6 months before price could regroup, get enough buy orders and now land. So now, if markets are to drop, we now have to consider how far they'll drop. If the plan is to push all the way to this higher supply or even higher, right? Markets have now prepared a safe landing place, or rather a negotiating place. Let's actually see if it's valid. Let's see if it's valid. I don't like it. Excuse me. I don't like it. I don't like it. And when I don't like something, I have to use other tools. So I'm going to use my faithful girl, Fibonacci, right? You guys know how to use a Fibonacci. There's a brilliant video I've done on Fibonacci, and a must-watch video on retracements. If you watched it before, refresh yourself on retracements. And the reason for that is because markets only trade about 30% of the time, and they do a lot of retracement and consolidation. So it is absolutely imperative that you click. You see right now on your screen, there's a little box somewhere here on the right side. Right click this if you're watching on a computer and open a new tab and watch that retracement video afterwards. And if you're on a cell phone, come back to it later, because what the fib does is the fib will always give you a high probability setup if you're reading your Fibonacci, of course, in line with order flows, that is supply and demand. And I teach on these things in my module too, right? So I've got a swing high, swing low here. So I'm going to throw in a bullish Fibonacci first, just to see this zone that I don't like, right? Because I don't like it, and that's all I have. I adjusted my fib areas for my kid, but now I see, I've been working with these settings on, and I think my boy removed something. It's really not a big deal. It's a normal fib, right? It's fine. I'm wasting time. Right, so this is the bottom of my Fibonacci. I'm going to draw it perfectly here so that it's at the swing low, swing high, right? So you can see this area here that I don't like is at a 50% to, golden ratio area slightly. So maybe I should get over it and like it, right? I don't like the imbalance, number one. That's the second thing I don't like about this area. Number two, I don't like the fact that price didn't actually break the supply. What price did was it tagged the supply, got the most out of the supply. If I was to tighten the supply without any type of areas of competition, you can see that yes, the supply might have been perfectly dealt with, but markets are still got tagged, right? And it's still a little bit. This upper week, for all we know, could be a peak supply on the monthly time frame. I don't know, but it's something to be wary of, right? So price has not yet taken out a supply. Because price hasn't taken out a supply completely, we have to then judge a couple of things, right? So if this is a bullish engulfing pattern, and you really have to be careful how you argue this one, right? And maybe let's zoom in one more last time. Okay, fine. Price did close a little bit higher, and price opened at the equals, right? It would be nice if price had opened a little bit lower, but price did engulf. Right? So we've got commentary fixed price for an order block, price leaves, right? So it is kind of going to work, and it's most likely going to appeal a lot to retail areas, indicators, and those supporters, because by that 50% mark there. Right, and it's a bounce off a previous broken supply zone. So it could be a flip zone, flip supply and demand zone. Right. So I'm going to mark it gray right now, just to remind myself that it's a valid area, but I don't have I'm not that confident about it, right? It's just a feeling. It's not a scientific approach, right? I could be wrong about my feelings. My Fibonacci is confirmed a retracement area. I have a valid order block. I have a flip zone. I have everything I need for this to be a valid buy area, right? So I'm just going to keep digging now. But markets are still leaving a supply. Please don't forget this. On the month of April, May, June, July, right? Second financial quarter, this green candlestick is looking to create a new engulfment here, which means while this is a 50% area for price, right? Markets might have needed a quicker retracement zone, right? So if I draw it now, my Fibonacci, instead of drawing from the ultimate swing low, instead just focusing on this swing low to this swing high, because remember how markets move, lower, lower lows, higher low, right? So we could be getting a sequence like that. Now, if looking at my Fibonacci, you can see that price once again is bouncing off the 50% mark, right? So this could be valid, but we might never see it, right? So if markets really want to push and remove this supply, then they already seem highly motivated to do so. But we have a long time to wait. So in the month of April, this is a 3-month candlestick. So we've got May and June. And the data from all those 3 months will then give us the type of candlestick that we have finally, right? So this is something to keep in mind. We've got fresh demands being created, and we've got a new current demand that looks like what we created, but we need to see how this candlestick will close because it's very much early days. This candlestick only started in April and it's already engulfing, right? So you could imagine this could end up being a very humongous green candlestick by the time we get into June. The monthly time frame, let's have a look. While the time frame still shows us a little bit of a drop. So this chart has definitely got some serious alignment problems. Now, you see what I said about that wick earlier on the 3 months chart? I said for all we know, there could be a governing supply there, right? So if you go back to the 3 months chart, that wick that you see there, that whole area that I've just highlighted with there, it's a governing supply. All right, if you do this long enough, and that's the thing about trading. Oh my God, trading will always weave out the most corrupt versions of you, right? If you're not a patient human being, do not hit the link down below. I don't do overnight miracles. I have never, ever, ever, ever in my life made a millionaire out of a student in a short amount of time. Fundamentally, because I never did that for myself, right? You only teach what you are. I never made quick money. It was impossible. It was a tiring, painful process. But those of you who stand the test of time, the 100 and something 6-figure traders that we now have, the ones that we're proud of, and I'm proud of everyone, but everyone's journey is unique. Me, it took me years. It took me 5 years because I went in the wrong things. I lost money 4 years consistently. It's a painful process for some people, right? Just depends on the type of help you get along the way, right? So, but at some point, you start to see these things very easily because you have spent enough time with your craft, right? So I've tightened that 3-month chart and I've now, created a 1-month chart in front of me, right? And a 1-month supply. And then now I'm like, oh, okay, cool. So all that was noise here. And this is where prices entered very politely into a governing supply. And this is probably where we started to sell last year in September, August, right? Look at this, September. There we go. That's the first chart I put in front of you, right? The chart that was marked up. I'm pretty sure in the war rooms, which are also, by the way, for free. All my trading signals are for free, right? You can see in my marked up chart that from the final last month of the year, September, October, there's a lot of selling that we started doing. There we go. So from October, and this is a supply created in September. After it makes contact higher there, this is where I started to sell last year, right? So I'm just showing you that the analysis is still the same. Supply and demand really doesn't change, right? So on the monthly time frame, price tags very nicely, this AUDJPY supply and is dropping. And now we can start to really assess, well, how far will price go? On the 3 months chart, it looks like we're going to get a new bullish engulfing pattern. But like I said, it's still early days. It's April, right? This could easily turn into 2 red candlesticks, May and June. And our governing time frame seems to insist on price going down, right? If price starts to go up here, that'll be an interesting take. We don't really have a lot of valid supplies on the governing time frame, despite the different color candle coloration. We've got a new one right here. Bearish engulfing pattern, a little bit of a basin, and then price leaves, right? Yeah, sure, this is very possible. This is very possible. If price was to go up there, I would not be surprised. Wouldn't be excited about it, but I would not be too surprised. Or price can just decide to continue to the downside. Just talking about this downside, there's very little clarity. That's why I said I don't like this area of value. All right. So if I do this, then yes, sure, there's an imbalance somewhere here. Right. There's no point in adjusting this zone, if I'm being honest. There's a drop in price, there's a base, then there's a rally, right? And so the 3-month demand stays as is. I mean, you could tighten it for these type of lows here, but that's generally how a lot of people get stocked out in the long run, right? But something like this would be fine. This would be realistic, right? So we have this relationship going. For the most part, price is still moving to the downside. On the Mayoral time frame, we get that push, the thing that's making that 3 months look like it's popping. If I look to the left, I can see there's just a massive imbalance that needs to be filled. If I look to the right, I can see that price keeps breaking structure, right? Going lower and lower, right? Confirming that the governor is really in charge, which is really the main focus, right? For mid swing trades, really, anyways, you know, we really do focus on what the governor is doing. Although I'm trying to teach you guys to be aware of the bigger picture, because when you get trades that are in line with the bigger picture, those trades run forever, right? So every time we get a clean break of structure, markets consolidate, breaks lower, then comes back up, breaks lower, markets are coming back up. So on the weekly time frame, we've got a zone that is not nested, right? It's not inside the governor, not inside this or that, and so just be careful of that, because potentially price could simply use this to create, you know, some liquidity for a couple of days to weeks, create some equal highs, and then markets will come and then retrace all the way into this area here. This would give markets a better selling price, right? A higher supply, and then we can expect a drop. So what I'm saying is, just be aware, this could be a good selling place, although price seems, as of last week, Friday, which was yesterday, by the way, it's this past week that just ended, potential for bullish engulfing pattern. And this is what price does. It pushes itself up every time it breaks structure, just so it can sell alongside structure. All right, and then I'm on the daily time frame, which should be interesting. This is how markets ended on Friday. Strong bullish engulfing pattern, taking out the closest daily demand, you know, really making it clear that, you know, we are still our loyalties with the governing time frame, which is to sell. So this coming week, you know, the last week of April, we can expect potentially a retest maybe, and then we can expect price to continue to the downside. And if that's not what happens, then we can expect price to then dig a little bit higher, just to still come down again. I'm just here to feel the vibes, right? Really just assess what's going on in the markets. The next daily zones to look out for, of course, where price last created a structure to start going up would be somewhere here, all right, in March of 2023. Cleaning balances, you know, area of competition might have been hit, doesn't look like it. More cleaning balances were created, but you know the rules. Whenever there are two competing demands, always buy low. That means be very careful. Price could use a big wick like this. You see this wick here? From the base of this candlestick all the way down to the distal line. Price could use a candlestick that looks exactly like that. Sit on the base of this area of value, and what would happen? The distal, the wick of that candlestick would break this base, stop you out, and then tag a lower demand. So because of that, we love to say buy low, right? So we've got a situation that looks like this right now on the daily. My bias is still on the sell side on USD, on AUDJPY. And the question is, where will price, you know, sell from? What did I just say? I apologize. In case I wasn't clear, my bias is towards the sell side of AUDJPY. My bias is towards the long-time sell side up until we get to, you know, very clear, concrete governing and 3-month and 1-year demands. We're going to sell until we get to something that clear. At least the governing demand would be great, right? Break of structures and all sorts of things happening here. Right, so please do look out for this AUDJPY. I think we're going to see a little bit of more selling action. I'm happy to see retracements. I welcome retracements, but if you look at this type of alignment, this daily hitting a downward trend line, which was last hit, I guess, in the beginning of February 2020, and where price started off all the way in September 2022. you know, it's become a little bit historical and a little bit too trendy, right, for you to ignore the signs that markets, generally speaking, want to trade to the downside, right? So wish you all the best. If you're a 365 trader and you're not waiting on me for war rooms and you took the sell trade on AUDJPY, I would be absolutely impressed. Do let me know. Thank you for watching. I hope this video helped you. I hope you enjoyed it. Don't forget, the links are down below for serious traders. People understand process. Number one, people are here for mastery. People understand that it is absolutely important to master something before you even throw a single cent into it, right? If that's you, then our academy doors are open for you. Hit the link down below, and I'll see you on the other side. Peace.